New today, the Bank of Canada making its second consecutive cut on interest rates. Our Kris McCusker standing by in the 680 Business Center. Kris, a lot of economists said, this was coming. So what is the latest? Let's break down the numbers.
All right, so a second quarter point interest rate cut. We just saw the last one in June, Melanie. This brings our benchmark rate to 4.5%. And yes, no surprise in this announcement. We're not seeing a ton of reaction in our loonie in response to this. There is a shift in the narrative, though, from the Bank of Canada away from the hyper-focus on inflation. Officials now expecting below potential growth is going to help cool inflation. The bank also sees weaker than expected household spending as a main downside risk, pointing to upcoming mortgage renewals as a risk to consumption growth. And remember, mortgage costs are a big part of that inflation story. The bank also says it sees signs of slack in the labor market and that job seekers are taking longer to find work. Economic forecast from the Bank of Canada staying basically the same, and a sharp rise in housing prices no longer listed as a main upside risk going forward. Mel.
All right, and the Bank of Canada Governor Tiff Macklem also keeping the door open to potential cuts down the road this year. What could we expect?
Well, that's going to be really interesting going forward. There are 3 more meetings this year, September the 4th, October the 23rd, and December the 11th. And as it stands today, Mel, there is a better than 50% chance that we see a cut at each of those meetings. Now, a portfolio manager I spoke to today said he expects to see cuts at the next 2 and then maybe a rejig or a reassessment to see what happens after that. But potentially 2, maybe 3 more cuts expected in Canada this year.
Big news. All right. Our Kris McCusker, appreciate the time. Thank you.
Thank you.